Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com on Tuesday, November 26th. Let's look at coal today, and here's why. We've got a market that's actually working really well. I mean, there's a lot of stuff that's working, and we've really seen that just over the last year. But really, the last few weeks, you would have expected a breakdown below this line, but instead we got a rally up through it, then a pullback to it, and now we move on. So if you want, you look at coal. Hang on, I can't multitask. There we go. And this was one of those that I was thinking back then, looks like we've got a nice little channel here. So the next time we get a pullback, we're going to look for a bounce, and then we'll take this for a ride. Now, that was before you knew that the market was moving higher. So this looked like a potential rotation. And so my point here in this video is might work does not equal must work. And you've got to understand, you've got to acknowledge when your analysis is wrong. And if you are always, at least open to being corrected, I'll say looking for why you're wrong, always trying to disprove your thesis, you will ultimately find that you're able to admit that you're wrong sooner, meaning that you're going to lose less money, because typically we lose money when we're wrong, right? So here's the point. As the market moved higher, we can look and see Alpha Natural Resources pulling back here, and I'd mentioned this either in Stock Market Mentor or Option Market Mentor, probably both. As the stock moved down, hey, we've got the 50 and the 200-day moving average right down there. We're probably going to get a little bounce here, maybe just a perpetuation of this breakout, but we should get a bounce here, and that will have turned out to be a good buy point. Well, that turned out not to be the case. I mean, it did for about 20 minutes during the day here, what was this, on Friday? But now we've got a breakdown below these two key moving averages. We'll look at others. Walter Energy. This broke down pretty, I'm not going to say decisively, but let's just say you got to be a real dyed-in-the-wool coal bull to think that this breakdown below the 50-day moving average is a buying opportunity or is, quote, wrong. It's not. Ultimately, I guess these stocks could go up, although the way Washington and the EPA are these days, that's absolutely not guaranteed. So then we look at Peabody Energy, same deal. We got a pullback and then a breakdown through the 50 and the 200-day moving average. So here's my point. You've got money. That is your stock and trade, pardon the pun. Your money is what you make money on. And so you've got it deployed at, in any number of ways, whether it's Apple, Priceline, United Technologies, you name it. You're buying stocks, you own stocks, and what you want to be doing is you want to be in stocks that are working. If they might work, then that's fine to go ahead and take a position, but you just don't want to overstay your welcome when you learn that you're actually not welcome at all. If you're doing that, then you're essentially indicating or revealing your stubbornness. Stubbornness does absolutely not work in trading, so I want you to avoid being stubborn. If you see a sector that's not working, then likely your stock is also not working, and that's really the case here with coal, so I'd want to stay away from it. As long as other things are working, stick with stuff up here in the winner's circle as opposed to down here in the penalty box. Okay, members, get over to the strategy session. We got some techs and then actually even some home builders we're going to look at. And by the way, if you haven't joined Stock Market Mentor or given it a try, suggest you do so. We will be having some Black Friday sales, and the members get the big discounts on those. So hopefully I'll see you over there.